This is K.K.A.Alaguappan, working as Associate Professor and Head in the Department of Corporate Secretaryship with Computer Applications and Professional Accounting, Kongu Arts and Science College, Autonomous, Erode. This session covers three aspects. The first aspect will be Introduction and Objectives of the Customs Act 1962, in which we will be seeing a brief introduction and the main objectives of the Customs Act 1962. The second part, we will be covering some of the important definitions in the Customs Act 1962. And the third part will be the procedure for import and export of goods. The brief introduction about the Customs Act 1962. In ancient period, if a merchant enters a kingdom with the goods, then he has to gift the king. This customary practice was now regularized, channelized, formalized, and termed as customs duty. நாமெல்லாம் உறவினர்கள் வீட்டுக்கு போகும்பொழுது இனிப்பு வகைகள், கார வகைகள், பழங்கள்லாம் வாங்கிட்டு போய் பார்க்கறது ஒரு பழக்கமா இருந்தது. அதே மாதிரிதான் இந்தியாவில் இருக்கக்கூடியவங்க வெளிநாட்டுக்கு சென்று நிறைய பொருள் சம்பாதித்த பிறகு அங்கிருந்து நிறைய பொருட்களை வாங்கிட்டு வந்து இந்தியாவில் வாணிபம் செய்வதற்காக வரும்பொழுது அந்த காலகட்டத்தில் ஆட்சி செய்த மன்னர்களிடம் அவர்கள் கொண்டு வந்த பொருட்களில் சிலவற்றையோ இல்ல ரொக்கமாகவோ அதனை அந்த மன்னர்களுக்கு கொடுப்பது ஒரு வழக்கமாக இருந்தது. இந்த கஸ்டமரி பிராக்டிஸ் தான் நாளடைவுல சட்டமா இயற்றப்பட்டு அது இன்னைக்கு நம்ம Customs Act 1962 என்று அழைக்கிறோம். So this Customs Act was passed in the Parliament on 13th December 1962 and it came into force from 1st February 1963. It extends to whole of India. The whole act is divided into 17 chapters comprising of 161 sections. The main objective, the first and foremost objective is to regulate the import and export of goods. Regulating in the sense, there may be some restrictions for import and export. The government will make a ban on the import or export based on the requirement or the need of the hour. சில நேரங்களில் அரசாங்கம் சில பொருட்களை இறக்குமதி செய்வதற்கோ அல்லது சில பொருட்களை ஏற்றுமதி செய்வதற்கோ தடை விதிக்கலாம். எப்ப தடை விதிக்குது அப்படின்னு பார்த்தா, நம்ம நாட்டுக்கு அந்த ஒரு குறிப்பிட்ட பொருட்கள் போதுமான அளவு இல்லாத போது அந்த பொருட்களை ஏற்றுமதி செய்வதற்கு தடை விதிக்கும். இப்ப நமக்கு அந்த பொருள் போதுமான அளவு வந்துருச்சு, விவசாய பொருட்கள்னா உற்பத்தி செஞ்சாச்சு, போதுமான அளவு நமக்கு உற்பத்தி இருக்குது, கையிருப்பு இருக்குது. இண்டஸ்ட்ரியல் ப்ராடக்ட்ஸா இருந்ததுன்னா மேனுஃபேக்சர் ஆயாச்சு. ஸோ செல்ஃப் சஃபிஷியண்டா நம்ம இருக்கும் பட்சத்தில் அந்த பேனை ரிமூவ் பண்ணிடுவாங்க, அந்த தடையை ரிமூவ் பண்ணிடுவாங்க. நமக்கே ஒரு பொருள் போதுமான அளவு இல்லைன்னா அந்த பொருட்கள் ஏற்றுமதி செய்வதற்கு தடை விதிச்சிருவாங்க. நம்ம செல்ஃப் சஃபிஷியன்ட் ஆயிட்டோம் அப்படின்னா அந்த தடையை நீக்கிடுவாங்க. பிறகு அந்த பொருட்களை ஏற்றுமதி செய்யலாம். இந்த விதத்துல ரெகுலேட் பண்றோம் எக்ஸ்போர்ட்டை. அதே மாதிரி இம்போர்ட், சில பொருட்களுக்கு மிக தட்டுப்பாடு நம்ம நாட்டில் நிலவிக்கிட்டு இருக்குது, அதை உடனடியாக சரி செஞ்சாகணும். ஸோ அப்ப அரசாங்கம் என்ன பண்ணுதுன்னா இறக்குமதி செய்யறதுக்கு அனுமதி அளிக்குது. அதனுடைய சுங்க தீர்வையை மிகப்பெரிய அளவுல குறைச்சு ஒரு குறிப்பிட்ட காலத்திற்கு அந்த சுங்க தீர்வை 10% இருக்குது அப்படின்னா அதை 5% குறைச்சிட்டு எல்லாரையும் அலோவ் பண்ணிடும். ஏன் அந்த மாதிரி செய்யறாங்கன்னா, நமக்கு போதுமான அளவு அந்த பொருள் இல்லை, அதனால எல்லா இறக்குமதியாளர்களும் முன் அந்த பொருளை இறக்குமதி செய்யணும். அப்படி இறக்குமதி செய்யறது மூலமாக அந்த பொருள் வேண்டிய அளவு நம் நாட்டில் கிடைக்கும். ஸோ யாருக்கும் போதுமான அளவு இல்லாமல் ஒரு பற்றாக்குறைங்கிற நிலையை சரி செய்யறதுக்காக அரசாங்கம் இத்தகைய தடைகள் விதிப்பதோ தளர்த்துவதோ செய்வது வழக்கம். So the government is regulating the import and export. If there is any shortage of goods, then the import or export may be banned or it may be relaxed in terms of percentage. The next objective is to raise revenue. Government needs revenue. How it is raising the revenue? Whenever the goods are imported, the government will levy import duty. Thereby, it collects certain amount. It is the revenue for the government. Whenever the goods are exported, it levies a duty called export duty, and thereby it raises the revenue. Here, I will show you a statistical data which is obtained from the Ministry of Commerce and Industry. For 3 decades, the first thing, 2001 to 2002, the first part, and second, then 2011 to 2012. Then last 2021 to 2022. Every 10 years, the data has been taken. You can see the volume of export during the particular period. Export, the values are mentioned in crores. During the year 2001-2002, the export value is 2,09,017 crores. And the import is 2,45,199 crores. The total value is 4,53,869 crores. And the last one is trade balance. Actually, if we want to say a country is strong, then one of the factors to say our country is strong or superpower, one of the deciding factor is the export should be more and the import should be less. If a country's export is more than the import value, then we can say that it is in the positive sign. For collecting the revenue, it is the total traded value, import value or export value, whatever may be. So in both the cases, the government levies the duty and it collects, and thereby it raises the revenue. And the last column, trade balance, which I have marked in red. Why is it so? See, for example, you can take the first part, 2001 to 2002, the export value is 2,09,017 crores, whereas the import is 2,45,199 crores, which is more than the export value. How much is the difference? It is a 36,181 crores. So it is a negative sign. Why we are calling it as a negative sign? Whenever you export, you will get the foreign currency. Whenever you import, you used to pay in terms of foreign currency. So our country should have sufficient foreign currency. If you are making an export, you will be earning foreign currency. If you are importing, then you will be paying in the foreign currency. Thereby, the foreign exchange or foreign currency will get reduced. So it is not a good symptom. So normally, a country should have more number of exports than the import. You can see the other values also. It has been increased. In the year 2011 to 2012, it is 8,79,503 crores. This is the difference between the import and the export value. See, it goes on in increasing. The third objective is to protect the Indian industry from dumping. What is dumping? In excess of, more than what is required. We can term it as dumping. See, it is enough if we have a cup of rice. After having a cup of rice, if someone asks to take one more cup of rice, then you are dumping. It is dangerous to us. Not strictly. It will not good. It will not hold good. Similarly, in the industry also, whatever is required is available, then it is good. If more than whatever is required is something not in a good sign. You can see some of the countries' mobile phones are dumped here. China made products. We are having many number of products, especially in mobile phones, cell phones we are having. It is more than what is required. It is available in all nook and corners. What happens to the Indian industry? It automatically gets affected. Indian industry is also manufacturing a number of mobiles. A number of companies are available to manufacture a number of mobiles. When the China is dumping here and it is easily available in the market at a cheaper price, normally the consumers will prefer to buy those products. Thereby, Indian companies' products are neglected, or sometimes the sales will be less. If there is no excess of China mobiles, then normally the consumers has no other option. They have to choose the Indian company manufactured mobiles. So the dumping is harmful. So the Customs Act ensures that to protect the Indian industry from dumping, it may regulate, it may impose some kind of conditions. The next objective is to levy and collect duty. Before independence, the Customs Act levied 5% ad valorem. What is ad valorem? Ad valorem is nothing but on the basis of value. What is on the basis of value? Say, for example, to have an easy understanding, I am putting it in a simple number. If you are importing a good for rupees 100, that is the value of the goods, on which 5% duty will be levied. Then you have to pay 5%, 5 rupees as import duty. So you are importing for 100 rupees, 5% is the duty. So you are paying 5 rupees as import duty. This is 5% ad valorem. What is ad valorem? On the basis of value. Here I mentioned the value of the goods is 100 rupees. It has started with 5%. Now it is more than 100%. For some of the products, it is more than 200%. For some of the products, it is more than 300%. You believe it or not, some of the goods, for some of the goods, the government is levying unimaginable percentage of levy. Why they are doing so? Indirectly, they are discouraging that kind of goods to be imported. Why 200% or 200%? The one objective may be to protect the Indian industry, as discussed in the third point. The another thing is, if it is something dangerous, if it is something harmful, then if it is purely in nature of dangerous or harmful, the government will not allow to import. Even if you are ready to pay 500% or 1000%, the government will never allow you to import such kind of goods. It will make a ban. So, a little bit harmful in the sense if the industry is getting affected, or the foreign exchange, when the government allows to import you more and more, then we will not be having sufficient foreign currencies. So the government normally encourages the export and discourages the import. Directly, it will not discourage the import. Indirectly, it will do it. It will levy more percentage. Thereby, we automatically reduce the import. And the last objective is to conserve foreign exchange. This is what I have been speaking to you just a minute before. It restricts the imports. Why it is restricting the import? To conserve the foreign exchange. Normally, the government will encourage for exports and it will restrict for the imports in order to conserve the foreign exchange. This is the first part which we have covered, the brief introduction and the objectives of the Customs Act. The second part will be the definition part. First thing, we shall see what is customs area. So, that any area of customs station and includes any area in which imported goods or export goods are ordinarily kept before the clearance of the customs authorities. So here there are two things. One is the customs station and another one is any area. Any area in which imported or exported goods are ordinarily kept before the clearance. So the goods are imported and we have stored it in some other places. That place is called customs area. We are storing some of the goods for exporting. Then that place is known as customs area. So maybe imported goods or export goods or goods which are going to be exported where we have kept. That area is known as customs area. The second one is customs station. What is customs station? Customs station is of three. One is customs port. Second one, customs airport. And third one, land station. Here the picture shows the first one is the customs port, where the goods are imported or where the goods are going to be exported from the vessel. Here the vessel means ship. The second one shows the customs airport. Third one shows the land customs station. The next definition is Indian customs water. What is it? So it extends up to 12 nautical miles beyond territorial water. First, we should understand what is nautical mile. In the case of road, we used to measure it as kilometers or miles. In the sea, we used to measure it in nautical miles. 1 nautical mile is equal to 1.853 kilometers. This is for better understanding. So the Indian customs water, it extends to 12 nautical miles from the baseline land. And after that, another 12 nautical miles will be called as contiguous zone. And there is another zone called exclusive economic zone, which is up to 200 nautical miles from the baseline. Why we are discussing about the territorial water, contiguous zone? What is the importance of it? The exclusive economic zone is the right of India to exploit for economic purpose like oil exploration, fishing, and so on. So what rights we have? Up to what extent we can do it? Shows the exclusive economic zone. After 200 nautical miles, it is high sea, which is common to all the countries. So, what is the significance? A customs officer has the power to arrest a person in India or within Indian customs water. So, we need to know what is the limit. The customs officer should know what is the limit within which they can act. Then, if the customs officer doesn't want to arrest the person and if he thinks he wants to stop the vessel, ship, and he wants to search, he can do it if the vessel is within the Indian customs water. Next one is coastal goods. What is coastal goods? It means goods other than the imported goods, which is transported in the vessel from one point of India to another. This is not imported goods. The coastal goods are one which are moved from one port to another port in India. Say, for example, we are moving the goods from Chennai to Mumbai. We have not imported or exported. We are just sending the goods from Chennai to Mumbai. These goods are known as coastal goods. So it is transported in the vessel from one point in India to another. And the next definition is goods. Goods is defined in various acts. In the Sale of Acts, there is some other definition for goods. And in the Customs Act, it is defined as the vessels, aircrafts, vehicles, stores, baggage, currency, and even negotiable instruments, and any other kind of movable property. Next one is dutiable goods. What is dutiable goods? These dutiable goods are those goods which are chargeable to duty and the duty has not been paid so far, which is subject to duty, but duty has not been paid. That is dutiable goods. The next is imported goods. What is imported? Imported goods means we are importing the goods from any country, from Germany, Australia, and we are bringing the goods to India. Then it is called imported. வெளிநாடுகளிலிருந்து பொருட்களை வாங்கி இந்தியாவுக்கு எடுத்து வந்தோம்னா அது imported, import பண்ணியிருக்கிறோம் அப்படின்னு அர்த்தம். Then export goods, selling the goods from India to a place outside India is known as export. Customs duty. What is customs duty? It is classified into two. One is import and another one is export. Any kind of goods, say for example, engineering goods, petroleum products, germs and jewelry, organic, inorganic chemical, drugs and pharmaceuticals, cotton, yarn, electronic goods, and so on. Any kind of goods can be imported as well as it can be exported. Whenever the goods are imported, a duty is levied called as import duty. Whenever the goods are exported, again a duty is levied called export duty. What is the mode of import or export? It can be done through three ways. One is through land, through sea, through air. Normally, the maximum import and export are carried out through sea, through ship, vessel. At sometimes or in lesser number of quantity will be imported or exported through air because it is a costlier. Clearance of imported goods. We shall see the procedure for clearing the imported goods. We are purchasing the goods from a country. Say, for example, we are purchasing goods from Canada and we are bringing it to India. So what is the procedure to clear the goods from the port or airport or from the land station? First procedure or the first step is captain of the vessel, aircraft or vehicle should file an import manifest or report within 24 hours from the time of arrival. Here I have mentioned two words. One is import manifest and another one is import report. If the goods are imported through vessel and aircraft, then it is called import manifest. If it is imported through land vehicle, then it is called import report. So anyhow, import manifest or report should be filed within 24 hours from the arrival. It is the responsibility of the captain. Sometimes the agent can also file the import manifest or report on behalf of the captain. But one thing, on arrival, the captain should file the original. What do you mean by import manifest or report? What will be there in the import manifest or report? I will briefly tell about it. In the import manifest, the captain will be having it, in which what are all the goods that are stored, that are loaded in the vessel will be there. The vessel will be coming through various countries. From each and every country, it may be getting some of the goods loaded. So what will be there in the import manifest? Which country is sending goods to which country? Who is the supplier? Or who is the importer? Or who is the exporter? Their personal details. Personal details in the sense legal requirements. And then the description of the goods, HSN, harmonized system of nomenclature, HSN code, and the description of the goods, quantity of goods, and the packing, everything will be there. Similarly, in the report, import report also, these will be present. These items will be present. This is the part of the captain of the vessel. What the importer should do. You may be importing some of the goods, or myself may be importing some of the goods. In that case, I am the importer. You are the importer. What should we do? We should file a bill of entry along with the documents. What will be there in the bill of entry? Importer name, address, vessel name in which it has been imported, port of shipment where, country of origin from where it has been imported, nature of packages, customs tariff heading, if there is any exemption, how much total duty has to be paid. These will be there in the bill of entry. So the captain files import manifest, importer files bill of entry. These two things should agree. Who should check this? Officer will check both the bill of entry submitted by us and the import manifest submitted by the captain. If it agrees, then he will send it to the appraiser. Normally, the importer files bill of entry in quadruplicate. The original and duplicate are to be submitted to the customs. The triplicate, the third copy, is for the importer, for ourselves. And the fourth copy is meant for the banks for making payment. So the bill of entry is normally prepared in quadruplicate in 4 numbers. Officer checks both the bill of entry and import manifest, and if it is agrees, then he will send it to the appraiser. Why he is sending to the appraiser? To assess the value, whether the goods are properly valued. Why the goods should be valued? In order to levy the duty. So the appraiser will check the value of the goods by declaration and documents. If everything is right, then he will ask the importer to pay the import duty. The sequence will be, first the vessel will be granted berth accommodation. After that, entry inward will be given by the customs officer. After that, unloading process will start. Which things should be unloaded? Only the things which the importer has submitted the bill of entry alone should be unloaded. Say, for example, a vessel is coming from France and the berth accommodation is given in Chennai. Then the officer grants the entry inward. The unloading starts. What kind of goods? The ship which has started from the France may be having number of containers. It has to go through various countries. Now it is in India, in Chennai. So here there may be 10 or 20 importers. They have to submit a bill of entry, and those goods alone is permitted to unload. The remaining things will be in the vessel and it will move to the other country. So if everything is agrees, then the customs officer will ask the importer to pay the duty. Once the duty is paid, the goods will be released. It is shown in the graphical representation. So you can see C and D. The first part, C or R, it is coming to the port, inland container depot, and it is moved to the bonded warehouse or to our business place. If we are moving to our business place, then we have to make the payment. How we have to make the payment? Either by cash or by allowing to debit our account. So if you choose to pay by cash, then TR6 challan should be used for payment of duty. If we prefer to debit the account, then you should have a current account, namely provisional duty account, in which you should have sufficient balance. So the amount of import duty will be debited in our provisional duty account. Either you have to make cash payment in TR6 challan, or you have to authorize to debit your provisional duty account if you are moving to your business place. Sometimes some importer, they won't move the goods immediately. Instead, they will put it in the bonded warehouse. In such a case, they have to give an undertaking in the bond saying that whenever I am moving from the warehouse, I will pay the duty. Until then, the duty is not paid. Duty is not required to be paid. So they can move the goods without payment of duty to the bonded warehouse, provided the importer should provide a bond. When the importer is removing the goods from the bonded warehouse, they have to make the payment and they have to remove the goods. So this is the procedure. A small video clipping. Here you can see the loading and unloading from the vessel. Here the vessel means ship. Some vessel has been arrived in the port and the containers are there in the vessel. Now one of the container is getting picked up. So now the container got picked up and it has been moving. It will be directly placed in the truck. You can see in the road, a truck is coming. A vehicle is coming. And the vehicle has been stopped. And the container which has been imported is now placed in the truck. Here, you can see a container which has been loaded in the vessel. So this container is going to be exported. So the container is placed in the vessel. Similarly, the loading and unloading process goes on. Yes. The next thing is Article 269A stipulates the import treated as the interstate supply. The import, you can import goods or services. What do you mean by import of goods? Section 2, subsection 10 of IGST, Integrated Goods and Service Tax Act 2017 says, bringing of goods into India from a place outside India, same as defined in the Customs Act. With regard to the services, what do you mean by import of services? 3 conditions should be fulfilled. First one, the supplier should be located outside India and the recipient should be in India. And the place of supply of service is in India. So if these conditions are met, then we can say that we have imported the services or imported the goods. If we have imported the goods, we have to pay the duty, as I already said. It is called customs duty. In addition to the customs duty, we are paying some more. What is it? The levy of tax. BCD, basic customs duty, plus integrated goods and service tax. Why we are paying IGST? Because the import is treated as interstate supply. So for which we are paying IGST. And then compensation cess. These are levied under the Customs Act 1962, read along with the Customs Tariff Act 1975. If it is in the case of service, who is liable to pay the import duty? The registered recipient on reverse charge basis, or the unregistered person, or the supplier. Anyone can pay the import duty. Another video clipping.
Here you can see some of the goods which are imported and which are going to be exported or loaded and unloaded from the aircraft. You can see a container which has been unloaded from the flight is now getting placed on the truck. Simultaneously, you can see another vehicle is coming nearby. Those are the goods which are going to be exported. So you can see here, I'm showing in the arrow mark. So these goods are going to be exported, and this is the container which was imported. So the imported goods are getting unloaded and it will be moved from the airport. It will be quite interesting to see this kind of video. It's only a sample. So the man is getting ready to take the truck and he is moving. You can see now the goods which are going to be exported is taking to the flight. Everything is automated. See how the goods are moving. It is well packed and it is getting moved into the flight. The imported goods are getting out from the airport. Now the man who is standing nearby is sending the goods into the flight.
Next, we shall see the procedure for clearance of export. First, the officer will see whether the goods are permitted goods and not prohibited goods. So, if the goods are permitted goods, then he will move on to the next step. If it is a prohibited goods, then he will not allow to export. The second thing is, the customs officer will ensure that whether it is properly valued, whether the goods are properly valued in order to levy export duty. The shipping bill or bill of export is to be filed by the exporter. What will be there in the shipping bill or bill of export? Similarly, as we discussed in the bill of entry. Here also, the importer, exporter, our details, and the importer details, the country from where we are sending, and the country to which we are sending, and the description of the goods, and the packages. Everything will be there. So the officer ensures that everything is proper. Then he will issue an order known as ship order. Next, entry outward certificates will be given. After that, the goods are exported. So what are all the documents required or that are to be annexed? Here is the list: shipping bill, packing list, export invoice, export contract particulars, letter of credit, LC. The first case, shipping bill. Who is exporting, to whom it is exported, and the description of the goods and the value of the goods. Everything will be there in the shipping bill. Packing list, what will be there? The individual products are packed. Individual products, say for example, one product, individual product, put together. 10 individual products may be packed as a small bundle. These small bundles may be packed into a large bundle. So, in what nature the goods are packed, that has to be annexed. Export invoices, export contract particulars. So, before exporting, the importer and the exporter has to make a contract. What is required by you and what I will supply to you, on what terms and conditions we have agreed for it. So the export contract particulars will be there. And the next is letter of credit. I will tell you in the next slide what is letter of credit. Quality control certificate. Whatever the goods we are exporting, we should annex a certificate known as quality control certificate, QC, to ensure that the quality is good. And relevant board certificate. If you are exporting textile related goods, then you have to get the relevant certificate from the textile board. If it is of handicrafts, similarly from the handicrafts board, and so on. These are all the things which has to be annexed to the shipping bill. The officer will check, and if everything is right, then he will issue a ship order, entry outwards, then the goods will be cleared. Here, the one thing left out is LC. What is letter of credit? Why we need it? Letter of credit, see, for assume yourself as the exporter. You are exporting some of the goods to Denmark. Say, for example, you might not have visited Denmark, or you might not have seen the person who is importing in Denmark. But you are sending the goods, selling the goods, you are exporting. What is the assurance for payment? If something goes wrong, how can we recover the amount? We are selling the goods in lakhs and lakhs of rupees. So we need a guarantee. We want the payment in time. So what we are doing is, we are requesting the importer to give the letter of credit, LC. You can see the first thing, sale contract. First thing, exporter ourselves, assume ourselves as exporter and an importer who is sitting in Denmark. So first we are making a sale agreement. After sale agreement is over, we request for LC. What the importer does, here is the second one. He makes an application to his bank to issue an LC. Then the importer bank issues letter of credit to our bank. Then next step, our bank advising letter of credit to us. So we are having now letter of credit. Okay. What does it mean? If the importer makes default in payment, the bank will come forward to pay. That is the purpose of LC. Why the bank should pay? Which bank should pay? The importer has requested his bank to give a guarantee, to give a letter of credit. On the faith of the importer, his bank issues letter of credit, which was received by our bank, and our bank sends to us. So now we are having the LC in our hand. If the importer makes the payment, well and good. If he defaults, then we will request our bank for the payment. What our bank will do? Our bank will request the importer's bank to make the payment. What the importer's bank will do? The importer's bank will make the payment to our bank, and our bank will make the payment to us. So our problem is solved. Our bank is not also in the problem. What about the importer's bank? He has The importer's bank has made the payment to us without collecting the amount from the importer. Now what they have to do? The importer's bank will collect later on from the importer, because the importer and the importer's bank are in the same country. The importer's bank will give LC if it has faith on the particular person. So thereby they can make the collection of the amount. Here, what LC is, we are making a sales contract with the importer. The importer requests his bank for LC. Second one. Third one, it issues a LC to our bank. Then fourth one, our advising bank sends the LC. So now we are having the LC. With the faith of it, we are making the shipment. We are exporting the goods. Right. The goods has been exported. What is it? After exporting the goods, we are sending the document, or we are presenting the document to our bank. Our bank, what it does, it sends to the issuing bank. Then finally, importer's bank makes the payment to our bank. This is LC. This is the pictorial representation. So we are having it in the container and we are exporting through C or A. And one more final video.
Here is another video which shows the export of cars. A man is bringing the car to the flight, and now the car is sent into the aircraft. So a person is taking a car from the truck and he placed nearby the elevator, and it takes the car now, and it has been sent to the flight. Something has got struck, so the man is running and removing what has happened, and he checks and he removes the obstacles. So now the car is into the flight. Here you can see a set of cars which are going to be exported. So the loading and unloading process will be very fast, and at the same time, the persons ensure that the goods doesn't get damaged. Now you are seeing the car has been in the flight and it is inside the flight. How the car is getting placed. You can see a person who is standing inside. So the packing or placing the cars should be in such a way the goods should not get damaged. Even you can't see even a scratch in the car. It is such a kind of precautionary steps were taken.
So we have discussed almost all the things. What will be the outcome of the session? First thing, it will benefit the undergraduate students pursuing corporate secretaryship, professional accounting, commerce, and its related program. This is particularly for the learners. For the listeners, it will be an eye-opener for young and budding entrepreneurs who wishes to enter into import and export. For the viewers, it will create an insight about Customs Act for the common public. Learning is not a destination. It's a journey. Happy journey.